Hey guys, it's a Cowboy. I'm gonna take advantage of this move in Ethereum to just, I think, explain a little bit what we're seeing here in terms of fib projections. And I don't know who exactly took the course yet, but there is a lesson in there that talks a lot about this type of situations here. And I wanted to take advantage of this because we have a live example of how this happens. So, there is a thought process out there, amongst, traders and, market participants, let's call them, right? That, nobody can really, look at the market and say with a certain degree of accuracy what's going to happen, or, which levels are going to respond, in a certain way. So, just looking at the Ethereum here, we've talked about this for a little bit, and it's not like we're using voodoo or anything like that, right? We just use the nature's ratios and the golden ratios to try to split a move into different segments and see, what are the most likely outcomes for this move to end or to go to or to finish at, right? And I'm not saying necessarily that the Ethereum, this is the top in Ethereum. It could be a temporary top and we could reverse from here and, start going into a fourth wave. Or we could go higher, right? But I'm going to take this as an example and why are we having a reaction in Ethereum from these levels. And, I might be premature here, but I think that, this is not going to go much higher at this moment. All right, and I think we're going to encounter some kind of a resistance. We might make maybe a slight new high, or maybe we'll overshoot a little bit to 280. But I think that this level here will offer some kind of the resistance into the market, and I'm going to explain to you why. And so in the course, in one of the lessons, I talk a lot about confluences or fib zones. And just by looking at all these green labels up here, you can see, how much of a confluence we already have here into the zone. And this is one of the reasons why we've looked at 272 as being a pretty healthy target for such a move. And you can use this into your own trading as well. And if you learn to combine, this stuff, you're going to get pretty accurate at some things. Now, on the negative side, you might feel emboldened to short because, Elliott wave and fibs give you, such a good accuracy sometimes, right? Almost like you hit a bullseye. But that doesn't mean that you have to. I mean, you need to have confirmation from the price. I've talked many times before you initiate a different position. And just because we've hit a certain fib zone doesn't mean that the market will necessarily turn up here, right? We got to wait for price to prove that to us. So, by looking at this count, we were basically looking at the 1 2 1 2 1 2 with the 3 4 and an extended fifth wave. And we projected this 272 here because we've basically looked at this fifth wave in green, and this was our kind of main focus. And we've talked about this as a fifth wave travels 161.8 multiple of a distance traveled in the similar structure between waves 1 and waves 3. All right, so that's one thing. But then you try to take advantage of some other confluences, and you're going to be using wave 5 of a lesser degree and see how that travels. But for that, obviously, you need to have a wave 1, you need to have a wave 3 and a wave 4. So the moment that you're pretty much projecting that this wave 4 is over and you're taking over this wave 3 and you're moving up higher, you can already start thinking about how far this wave 5 it's possible to travel. So what we do is we take, for example, a wave 5 versus wave 3. So we project from a wave 3. So even if you use your projecting tool, right, you start here at the bottom of the wave 2, origin of wave 3, you go up to the wave 3, you pull back with your projecting tool, and then they'll give you 100% of wave 5. So up here at the 270.54, you can see a 5v3, you have 100%. Okay, wave 5 versus wave 3. Now then you look and you say, okay, well, what other, pretty standard projections we can use to find the end of a wave 5. And then you do a 5 versus 1. So a 5 versus 1, up here you have another 100% in green that it's at 272. So you take this wave 5 and you can see that it's pretty that accurate, equal with wave 1 up here. Okay, that's another projection you can use. And then you can use the standard one, which is 5 versus 1 plus 3. Just like you've used it into the green wave, which was this, you're using it into the orange wave. And you have a 618 multiple of wave 5 of distance traveled between wave 1 and wave 3 together. This is a 618. So you can see how all these golden ratios are responding and equality levels, and markets are not random. They have a purpose, and they have a meaning, and they have an equilibrium. Okay, so also if I go back to a daily chart, and you can project that as well, what I've done is I've pulled the fib zone from the top of this wave 1, a fib retracement from the top of this wave 1 to the bottom of this wave 2, and you have 786 pullback coming at 282. Okay, so not only you have this projection of the move, of the impulsive move that goes up, but you also have a retracement as a previous wave since December, whenever that was, right? June 25, 2019, because markets operate at all degrees of trend at the same time. So using this, it's important because it can give you some solid levels up here. Now, we'll see what happens in Ethereum. If the market stalls up here, and you could see that we have gotten a first reaction down, if you go on a 15-minute chart, which is pretty solid, it seemed that we have broken below wave 4 of a lesser degree, which would be a first indication that we are about to correct here. And we'll see what happens. But, there might be a top kind of being formed up here, and we could be, dragging here for the next 2-3 weeks maybe into a wave 4. Okay, now I wanted to say something, because the issue that I have, it's with this wave 5 and this wave 3. So I think by the way this market moved up here, I think my wave, and let me put a top to this wave 1, you can see that 100% was 272.36, and we went as high as 275. So what this means is that our third wave is the smallest wave in the sequence. And I'm not sure if I should allow this, just because I've had an extra spike up here, being the crypto market. I need a little bit of a convincing, and that's going to be once the move kind of corrects back here. If we're going up higher a little bit more, then for sure this is wrong. If we're starting to correct in Ethereum, that means that I'm going to have to accept this from the market and just go with it the way it is, because it's cryptos, and sometimes it happens in the futures market as well, where you get an extra boost and an extra spike, but not by much. Okay, you can only go a few dollars or a few pips, and then, because otherwise your wave 3 becomes the shortest waves in the sequence, and that's illegal. All right, that we're breaking the rules of an impulse move. So let's pay attention to what happens in the Ethereum. But if anybody's long and you have enjoyed nice profits, this is a place where I would start to shave off my position, and I would wait for a point of re-entry into this market. Okay, and it doesn't mean that you're greedy if you're waiting for a move to hit exactly your targets. It just means that you're respecting your analysis, and you're looking for the market to hit, and that gives you confirmation and confidence into your own trading and analysis as a wave principal practitioner. Sorry. All right, thanks guys, I'll see you later.